Hey everyone, welcome back to the channel. In today's video, let's talk about how Lendingclub small business loans impact taxes. And when you take out a Lendingclub small business loan, it's natural to wonder how it's going to affect your taxes. The good news is that while receiving a loan itself is not considered taxable income, the way you use and repay the loan can have tax implications that matter from your bottom line. First, the principal amount you borrow is not taxable. For example, if you receive a $50,000 business loan, you don't need to report that as income on your tax returns. However, the interest you pay on the loan is usually tax deductible as a business expense, provided that the loan is used strictly for business purposes. This means that if you use the funds to cover payrolls, inventory, marketing, or equipment purchases, the interest portion of your payments may reduce your taxable income. It's also important to keep careful records, maintain receipts, invoices, and loan statements that clearly show exactly how the borrowed money was spent. If you mix personal and business expenses, you could lose deductions or face complications during an IRS review. Another key point is asset depreciation. Now, if you use your loan to buy equipment or other qualifying assets, you may also be able to deduct depreciation over time in addition to deducting loan interest. In short, Lendingclub business loans can provide tax advantages when used properly. Always separate business and personal finances, and also track your expenses and consult a tax advisor to maximize deductions while staying compliant. That's pretty much it for the video, guys. Hope you liked it. Hope you found the information here useful enough. If you did, like, share, and subscribe for more helpful tutorials. Thank you guys for watching, and I'll see you in the next one.